What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining us today. Just a short video for you guys today on a live analysis of USD JPY, which I've just published over on the Commitment of Traders Club. And let's get straight into the video as how we break it down from a multi-time frame analysis to executing our trade on the 4 hour. So without further ado, let's get straight into the video. So over here on the weekly, we can clearly see that since the beginning of the year, the market has made a nice impulse to the upside, clearly reversing from previous years of downward trend. A nice juicy retracement on the 19th of April, which the market has now continued in our uptrend to where we are today, which has even broken past our previous higher high. So we can see that the market will potentially push further up and we'll catch this retracement to this level to maximise our profits. So how do we attack these sort of scenarios over on the club? Well, first of all, we draw our major levels, our major key levels. So first off the bat, we can see around this area here, so the 112 zone, we'll draw in our first area of resistance, which will also look to target this area as well. We can also move it up a little bit, make it a bit more in line with the previous history here. And then what we also want to draw in is our anticipated retracement area, which we hope will be at this major level here, which was resistance, and we now hope to catch that as it turns through support. Now, one of the questions I always wanted to ask when I was starting out was what makes a key level and not just a normal level? Well, a key level is an area in the market where price has reacted to it dramatically rather than subtly. So we can see here this is definitely a key level, and we'll see this further when we draw the time frames down onto the daily, as price strongly rejected this area, pushed to the downside. So this leg here was caused from price up here, so the 110.5 area, and then pushed back to the upside. So a not key level perhaps would be something around here where market is just fluctuating a little bit, and here, for example, is perhaps not so much a key level, but this definitely is, and so is this. Okay, so now that's put to one side. Let's head down on the daily to get a clearer analysis. So we want to get as many confluences in our favour before we take a trade. For those of you that don't know, confluence is an edge or a bias from the market that pushes our analysis forward and tells us that what we've analysed is correct or has a high probability of being correct. The first one is we're trading with the trend. We've identified immediately that the trend is to the upside. We don't like to trade against the trend, it just mitigates our chances of success, and we always want to be on the right side of the market and have the highest probability of winning. So straight away, confluence number one, the market is in an uptrend. We'll find anyone who's difficult to argue with that currently. We can even draw this trend line on there to help us with that. So on the daily, we can clearly see that here's our major level of resistance. Why is it major? Huge wick rejections in this area previously, pushed this leg to the downside, and the market has then since pushed back to the upside and even broken above in nice impulse pushes movement, as we can see. So we will look to enter our trade on this pullback here of the retest of the previous higher high, which will now turn into support. We can see that the market did pull back previously after the break, but we'd like to see it come back again for that second test to push to the upside. So our trade will look like this. So broke, retested, broke, we'll look for that retest again, push to the upside. Going down onto the 4 hour, what we can see here is again in much clearer detail. Here is our previous higher high, and here is the first retest of that area, which turned into support, push back up. So we'll look for the market to pull back to this area and take our trade, which will look something like this. Okay, stop loss, I like to be relatively free with my stop loss. The worst thing that can happen to a trader is the market to stop you out and then continue in the direction that you anticipated. That's the worst case scenario. So the trend line has been respected relatively nicely in previous, so we can have the stop loss just below the trend line, and again we want a nice 1 to 3, so we may just need to be a little bit tighter with our stop loss, or even bring the entry level down stretch that out and get a nice 1 to 3 there. Lovely stuff. Why are we targeting here? It's the previous level of major resistance, so the market is likely going to find additional resistance there before it either continues or reverses. So what we'll see is that the market will pull back to this area, so retrace back here and then push to the upside. Can we see that happening already? Absolutely. We had a small level here which retested this previous higher high, and it has at the moment broken below, and some would argue say closed below. We want to see this selling momentum continue to the major level, and then we want to see the market shift in momentum, so the buyers taking control and pushing price up to the top for us to enter. Entry techniques, we want to use the stochastic indicator. I love this indicator, it works well for me. When it comes down here and shows that the market has been oversold, we can then look to capitalize, and it's a good signal to enter our trade. And also wick rejections, something very similar to what's going on here, where the market has rejected pushing below this level with these wicks, and then a nice big impulse candle is a good sign as well that momentum has changed. So that's what we'll be looking for. But that's all very good. That's all technical analysis and price action analysis done nicely, and it's very likely that it's going to work here. But what do we like to teach our club members? How to become better traders, and that is trade with the banks. There's no point trading against them, you're always going to lose. You want to trade with them. Okay, great, Lucas, how do you do that? What you do is you head over to the Commitment of Traders Club. If you're a club member, you go onto the Commitment of Traders reports. We are trading USD JPY, so we'll go down onto JPY, and our nice chart will set out how institutions and banks are moving their money. Now it is traded spot against the USD, so this chart here is JPY USD. We're trading USD JPY, so we just simply reverse it. Nice and simple. So for the current week, 29th was the latest published report. We can see that institutions have closed long positions and opened short positions on the JPY, which has increased the net positions short to 69.8 thousand net positions in favour of the shorts. Now what does that tell us? That tells us that the JPY is weak. It is weaker than the USD because they're shorting the JPY USD, which means they're longing USD JPY. There is our third and final confluence to say that the banks and institutions are also trading this pair to the upside. They're buying into USD JPY. The JPY is weaker than the USD, so price will continue. What does that tell us? That tells us then that we can definitely set our targets for the trade to this weekly level here, which was resistance in April 19, 20th of Jan 2020, and again hopefully here in sometime in July or August of this year. We'll look to close this trade out. As I say, we're swing traders, so it takes some time, but the profits are huge. There's our three confluences. Let's go over those one more time. Number one, we're trading with the trend. There's confluence number one. Number two, we're waiting for price to pull back to the previous higher high, previous resistance level to turn to our support to push to the upside. Confluence number two. To boost that confidence, we have seen again on the 4 hour that it's done that previously. It's reacted from this level, pushed upwards. Slightly going to do that again. And finally, confluence number three, the banks are doing exactly what we anticipate. They are also longing USD JPY as they've weakened their positions on the JPY. They've added shorts. They've closed their long positions JPY USD and added shorts JPY USD, which simply translates to longing USD JPY. So in the next coming days, we want to monitor this pair on the 4 hour, wait for signs of the momentum to change from selling to buying. We can enter this trade. Fantastic. How many pips will we profit from this? 150 pips roundabout. Fantastic moves to the upside, hopefully over the next few days. Well guys, thank you for watching this video. I hope you learned something new about multi-time frame analysis, how we go from the monthly down to the weekly, to the daily, to the 4 hourly, and how we use the Commitment of Traders reports to boost our confluences in the market and confidence in the market as well. If you want more like this and to also get daily and weekly forex signals, head over to the Commitment of Traders Club, where we set it out nice and easy for you guys to join, be a part of a community, and the best thing is it doesn't cost you an arm or a leg. So guys, thanks for watching. Smash that subscribe button, smash that like button so you can get more videos like this and grow with your fellow peers. Thanks guys, all the best.